So today is Wednesday, the 11th of September, and we are heading into the US Open in quite a busy kind of news week. Certainly not just wars, although there's plenty of that going on, but just in terms of data, on the schedule. Yesterday we had PPI, which is the producer prices inflation data. Today we have US CPI, which is the consumer prices inflation data. And I would argue that those kind of are the most important things, if you like, on the docket for ahead of the Fed meeting next Wednesday. We're now 5 trading days away from that Fed meeting. Normally, that week I would argue should be bullish. If the Fed are not expected to do anything as we head into options expiration week next week, everything should be pretty bullish. The only thing that's going to upset things, the market likes rate cuts. However, if we see high inflation data today, it may spook the Fed. And at the moment, the majority of the market is expecting a cut next Wednesday. So we could see some of that being priced out, and we could see some pullbacks in stock indexes and risk assets based on that. So yesterday we had the producer prices, and last month it had come in at a big 0.9%. That puts it back in the range of the really nasty inflation that we had in 2021 post-COVID. Yesterday it was adjusted down to 0.7, but it came in negative. However, this data, really isn't smooth, and so if we were just to go on producer prices, which are US produced goods, we could say, well, inflation is falling. However, anecdotally, I think that we're going to be in that situation where everyone's telling people that inflation's going away and they're cutting rates, but it's not really, and it's not going to feel like it. That's the thing with inflation, especially, food and stuff, it pushes the prices up. Unless these prices actually fall, it's just, they stay at this new level. One thing that struck me yesterday when I looked at the producer prices changes is Turkey. So if we look at the 12-month price change year on year, we can see that eggs are falling really big, 30% down, but processed turkeys are up 47%. So very soon, we're going to have, and roasted coffee, well, that's a different geographic thing going on. But turkey prices up 47%. That's going to hurt when we come to Thanksgiving, and people will notice that. And that's just something I thought interesting. So today, obviously, we have got CPI forecast to come in at 0.3, which is obviously 3.6% year on year, which is not really at the Fed's target of 2%. So will they still cut? Will it still cut? A miss in CPI would be pretty good, but I'm not sure that that's going to happen. Again, the ECB today are forecast to do not very much, and UK GDP could be horrible on Friday. Watch out for that. So let's take a look at the charts of where we are. In stock indexes, we are still sideways, pushing the S&P is one of those blow-offs where we keep grinding higher and making a new high and choppy pullbacks. One thing I'm a little bit concerned about here is that we are in a little bit of a wave 5. So in a trending market, you would normally see moves like this. And one thing you notice is these waves don't pull back into the previous wave, whereas sometimes in an leading diagonal in a wave 1, you will see overlapping price action like that. But in a wave 5, you very often see that. It'll look like this, and it'll get quite choppy and overlapping, which is what we're seeing here. And potentially this is an ending diagonal. And when you have an ending diagonal, you usually pull back to the bottom of this previous low, which in the S&P would bring us back to 6,200. Here we are at 6,550. So we need to watch out for something that will kind of end this party, because so many people are expecting the Fed's hike next week, I think there's quite a good chance that it'll all be priced in, especially if we have okay inflation data today and it continues to fall. And so we could see some profit taking and some pullback at the second half of this month. I think it's really kind of all going to turn on today. And it is quite important for that, because really what the Fed do has now become kind of the most important thing, wars and everything else aside. So where we go from here in stock indexes, I think is all going to come down to this inflation data today. In terms of the dollar, when I look at FX, I think that the dollar is will continue to fall. When I looked at this chart before, I know we've been in this very nice channel, rising channel, ever since the credit crunch in the US dollar index. This is the one that's very heavily based on the euro. And we've been in this channel, obviously, since the credit crunch low of 2008 here. And if we make a completed measured move, we haven't quite finished going down yet in the dollar. The price target is a little bit lower, around 94, as I spoke about yesterday. And that also means when I look at the euro, if you're looking at the euro ahead of the ECB today, I think we've got a further swing, and we've got a big round target of 120 in the euro on the upside. And that comes from, if we go all the way back to the 85 lows, and I know that we didn't have the euro currency then, but we did have a basket of currencies in the eurozone that this is measured on, and we are doing and these fib levels have been really well respected. So for me, 120 is a pretty hard target on the upside, and because we're making this very nice measured move, I think that this choppy sideways we are in will resolve with a continued move higher in the euro. So we're not done that short term today. What are they going to do? I honestly, I'm so neutral in this. Whenever you get a flat here on the daily, whenever you get your flat moving averages all bunched up and tight and sideways, we're in a sideways trading range. I would like to see a breakout from this range and a move higher, but I think that's going to be driven by the dollar next week and not by what the ECB do today, unfortunately. So risk on continues. Everything is trying to push higher at the moment. The only thing that could wreck it today then is going to be the CPI data that comes out at 1:30. So watch out for that.